Hi everyone, and thanks for tuning in to All Things Accounting. Today, what I'm going to be taking you through are some liquid assets, what we refer to as liquid assets, and I'll explain to you what that means. But in particular, cash, accounts receivable, notes receivable. So stay tuned and we will do this together. So when we talk about assets, what we are talking about are different things that help you generate income. Because after all, if we're going to be running a type of business, one of the most important things is what we call the bottom line. So that means net income or gross income. And we have to try to arrive to that, but at the same time, we need certain things in order to help us get to that point. And so in terms of this, assets, there are certain criteria that we can say that, number one, that we have to own these assets. And secondly, they have to have current or future benefit. So what does that mean? Current or future benefit. So let's say that I buy a pen for my business. It has current benefit right now because I can use this pen to do whatever I need to run my business to help me generate income. Or, for example, if I spend money on a bunch of different things that I'll be using in the future, for example, prepaid insurance, well, that has future benefit. So that still falls under the classification of an asset. So one of the biggest things is for assets is that they are accounted for by using debits. Now, a short form of that is DR, debits, okay? And we'll go through that in a different tutorial. Today's just classifying some basic assets and what they are. Now, in terms of liquidity, what we mean by liquidity is that certain assets can be converted into cash equivalents a lot more easily than, say, other assets. So that when we look at the balance sheet, the first item on the balance sheet tends to be cash and cash equivalents because, as they say, cash is king, or if you want to refer so, cash is queen. So in this case, cash would be usually the first item. So again, what is cash? They include such things as coins, different types of currencies, other things that it might be accounted for are money orders. Now for those who may not know what a money order is, for example, let's say that I have a savings account or a checking account. I want to pay for a car. I go to the dealership, I buy a car, and I'm going to eventually get a money order. So what I do is I go to the bank and I will give them all of the pertinent information, and they'll provide what looks like a check, but it's an official document, and I'll tell them how much money it has to be made for and to whom it's going to be made. And that's going to be just like cash, because if I lose that, well, that's pretty much I lost the money. There's no refunds or anything like that. Now, there's other types of checking account balances. account balances as well that can be included. So those tend to be the top things on the balance sheet because they are the highest of liquidity. You can't really get any more liquid than cash. Now, next is going to be what we call accounts receivable. Now, accounts receivable, in one separate tutorial, I'll take you through what are accounts receivable in more depth. The aging of accounts receivable and what bad debts expenses are and how that relates to accounts receivable. But let's just define it right now. So accounts receivable are such amounts that you can view as being owed to you because you have already provided the particular good or the service. So it's the amounts that a business expects to receive. So again, it's because they've already fulfilled their obligation by providing the goods, by selling the goods and delivering it to their customers, or that they provided a service. Now, last thing that I'll be going through on this particular one here is something similar to accounts receivable. They are notes receivable. So, notes receivable you can think of as a promissory note. So, what does that mean? Well, let's say I go and I want to buy a particular good from somebody. I don't have the money right now, so I will say, okay, it's an IOU. I owe you some money. And that's going to be when you can call it on demand, or it might have a definitive date where I have to pay you by. So those are certain types of assets there that tends to be the most liquid because they can easily be converted into cash or its equivalency. So I hope this helps to clarify some accounts here for assets. And please stay tuned for some more tutorials. Please remember to subscribe to this channel and hit the bell notification icon so that you can always be up to date on some of my new tutorials that I will be holding. And so I hope you enjoyed this one, and until next time.